Today, we're digging into an investment report on DVLT stock. It's projecting a massive 300% upside to a $7 target, all based on a pivot to real-world asset tokenization.
Right, and that 300% really hinges on one core idea. The DVLT has to become a $200 million plus revenue powerhouse by 2026.
Which is a huge jump.
A huge jump. And while the thesis relies entirely on this RWA strategy, the report's central financial assumption needs to be much more tightly grounded in that strategy.
Okay, so let's get into that. The RWA pivot is the make or break factor here. The report mentions execution risk, but it feels a bit vague.
It is. The weakness here is that while the valuation, the 2.5x forward sales multiple, is reasonable enough on paper,
the math itself isn't the problem.
Exactly. The problem is that the report doesn't really connect the execution risk to the specifics of the RWA strategy. It doesn't answer the big question. How does this RWA plan actually generate that $200 million?
So the projection feels a bit like guesswork.
It feels disconnected. So the suggestion is to really bolster that argument. We need to detail the product integrations.
Show the mechanics.
Precisely. Show why the market should trust this specific segment to deliver. I mean, don't just say IBM Silver partnership.
Right.
Explain how that Watson X.AI integration actually speeds up RWA data valuation. Or detail the growth projections for that $10 million Silex licensing deal. That makes it tangible.
It moves it from a big idea to a real business plan. Okay, that makes sense. Let's move to the second point. The report has a pretty solid technical analysis section.
It does. It identifies that $1.70 to $1.80 as an accumulation zone and calls $2.02 the key breakout point.
But
the analysis is, it's siloed. It feels totally separate from the main investment thesis, which really reduces its impact for an investor who wants to act on this.
So it's a structural weakness. The data is good, but it's in the wrong place.
You've got it. The suggestion is to weave those technical price points directly into the discussion of the catalysts or, the final verdict.
So you're saying link the chart to the news.
Yes. Create an integrated call to action. For example, you could reframe the conclusion to say something like, a hold above $1.70 is critical, and a cross above that $2.02 resistance would validate institutional entry following the Silex deal monetization.
Ah, got it. So the technical move becomes the market's confirmation of the fundamental trigger.
Now you're talking. It creates a much more powerful and actionable narrative.
That's a great point. Okay, finally, let's talk about tone. The report lists 3 key catalysts.
The strategic war chest, the IBM and Silex connection, and
the meme coin dividend.
Right. And that last one feels different.
It's a huge tonal contradiction. That's the weakness. You have these serious institutional credibility drivers like IBM, and then you list this dream bold draft meme coin.
Which is really a retail hype play, right, to force a short squeeze.
Exactly. And putting it alongside the fundamental drivers, it undermines the seriousness of the whole high-risk, high-reward thesis for a $7 target.
So it muddies the water. Are we appealing to institutions or meme stock traders? It feels like it's trying to do both, and that weakens the core argument. So the suggestion is simple. Categorize the catalysts by their impact type.
Split them up.
Yeah. Recontextualize that retail gimmick. Maybe you move the meme coin detail out of the key catalyst section entirely.
And put it where?
Put it in risk factors under volatility. Or frame it as a separate near-term volatility signal. Just don't present it as a foundational driver of long-term value.
That clarifies the message significantly. Okay, so to summarize the actionable steps here.
First, strengthen that RWA execution story. Show the how, not just the what.
Second, fully integrate the technical signals into the main thesis to create clear, actionable entry points.
And third, sort out the catalysts. Separate the short-term gimmicks from the long-term fundamental drivers to maintain credibility.
Excellent. We encourage you to refine this report with these points in mind, and please submit it again for another review.